Welcome to TradeTheMBI.com. This is John's reports for the 26th. Well, yes, Powell spoke and the market reacted, and it was fantastic because he said something absolutely different than he's ever said before. No, he said exactly the same thing he's been saying forever, and the market loves it because he keeps telling them that he's going to cut rates some point. But now it's closer because he's shifted focus from inflation to employment. But according to the labor numbers coming out, if you believe them, and that's what's officially being reported, there's no problem with labor. So why would he move rates? But as long as you talk about it and keep saying you're going to cut rates, it works. So he hasn't done anything yet. We'll see if they actually do it. It'd be strange to see it happen. I understand the desire for most people to have the lower rates, especially when it comes to real estate market and everything else. But you need to see oil take a nosedive below the 70s. It isn't there yet. So, no. You can do it, but the effects will be exactly what we experienced from 2 years ago, and you'll get another cycle of radical inflation. So now, if you're doing it for political purposes, a little late. That should have been done at the beginning of the year if it was going to have any impact at all. Now it's just window dressing, so to speak. Now, that doesn't mean that rates aren't high relative to what people would enjoy, but from an economic standpoint, they're lower than they should be relative to what inflation is. So take that for what it is. When we look at the NQ, you can see it's slightly, we could go back to the ES so we can compare those relatively speaking. You see the big difference between magenta over yellow, complete drop off of shorts in this particular setup, and of course steel rising on the DOC over the falling orange. Those are all positives. No question about that. It's slightly different when we look at it from an NQ standpoint. It's been a little bit weaker, and you can see it's been weaker because it's still below that key threshold of the algo where the S&P is clearly above it. And so it just shows the relative rebalancing of tech versus the broader market. And it's kind of a normalization, but until it's normalized completely, you're going to get a little bit of irregularity is what I would refer to it, where one is rising at a little bit disproportionate rate to the other. From a treasury standpoint, of course, you're still in negative yield territory, and the market's still expecting rates to be significantly lower than they are. Hasn't happened. They're going to continue to jawbone and wish, but if it doesn't take place in September, then what? At what point do they actually believe reality versus what's being spoken? And for now, its narrative has been the winner all along, but look at oil, moving right back up mid-70s. So until you can break down below this 70 level, it's just problematic from this idea that you're going to see any, not even deflationary, but just a control of inflation. All they talk about is the rate of increase it's still increasing. It just is going less fast than it was before. Big deal. It's still devaluation. No other way to describe it. Reflecting it right here in the euro, gangbusters, simply because of the expectation that something might happen. And of course, again, this is supportive of European banks and that, because they're still in trouble. There's been no change in the economic outlook for Europe relative to the U.S. The only difference is now you're looking at a relative decline in U.S. production, so that is a bonus for the euro that is stagnant. From a gold standpoint, again, contrary to what people believe, you would think that lowering rates and all that would be such a positive and drive gold into the floor, and yet gold continues to rise. So it goes shock. No, because the reality is that the confidence game in America still works in America and the broader and Western area, but it's faded around the rest of the world. All those countries that used to be buying treasuries and that are now not. They're buying gold instead. And those BRICS nations are all moving away from dominance of US dollars. And we've seen those numbers. And as that continues to grow, it becomes more and more problematic for US dollar dominance, obviously. But it has broader implications because, again, all you're doing is now recycling the debt you've got that keeps growing under a smaller number of people that you're pawning it off to. And it's basically the government borrowing from itself and then creating, fake IOUs through the Fed's balance sheet. Which begs the question again, why you collect taxes if you can just keep doing that? No idea. That's a whole separate issue. But gold's going to continue its climb, and breaking through into new highs will not be a surprise as it moves towards 3,000+ at a minimum, unless there's some dramatic change in the policy. And of course, if things continue and Biden 2.0 is added into Obama 1.0, 2.0, you're just going to get more of the same. And so you'll continue to see that. And of course, we talked about this would lead to the excitement in Bitcoin, and that once it had stabilized off the whole, and we see now that, like we were talking about, the Mt. Gox supply throw wasn't resulting in as much negative selling as expected. And of course, that is a bonus. And it had to rise anyway because miners just aren't, they're in a net negative depending on their electricity costs. Got to take care of it from that standpoint. It's also been a help to ETH, and they should continue to do their back and forth. I think they've, as much as they're claimed to be volatile, it's, no different than some of your NASDAQ stocks, relatively speaking. The beta is not that bad. They're going to suffer the same drawdowns and then moves back that other securities now that they've matured. From a 50K standpoint, you can see we're just elevating right back up into the peaks. We've got a 50K with a bit of an MBI white spike, but as long as Magenta's leading, but when that flips, that's when we'll start to see that return back down to the 50%. So that's baked into the cards. It's just a matter of waiting for it to take place. Keep that one in mind. And that's going to be necessary, obviously, from an option standpoint. Here's the current post-market. European is all roses right there after filling back some of positive extremes as well as just clearing stops. But when we look at it from intraday, there's violent gyrations, which, again, all beautiful for an options setup configuration because you got to kill the gamma and everything, and then you get extra shorts built in, and then you drive them up to the other side of it. And so the game continues. We continue to play it. No objections to it anyway. Just going to continue to ride what is, and again, that's purely speculation and perception at this particular stage. So you can throw your logic and all of that out, but obviously it's logical to understand that it's being played in a narrative way, and you've got to go with what the algos are telling you, and that's where the money is being applied. That's that. There's nothing else you can do about it, so you're just going to continue to go with what is, and it's just something we've been talking about forever. So as always, though, anything relevant, I'll put on the Skype chat. Have a good one. Trade well.